One of the key themes coming out of this earnings season is actually the degree of consistency in banks' earnings. This has been overall a fairly mixed earnings season for corporates in US and Europe, but in the banking space, this is the third consecutive quarter where the market's actually revising earnings expectations higher for the banks as they come out and report. So I think we're some time away actually from the asset quality problems.
Yeah, you made note of how, particularly in your notes that were sent through, that you believe that banks may need a soft landing in order to perform, and that's why perhaps they're so cheap at these levels. But how close are we to seeing that sort of soft landing in this sector?
I think for the sector, we're at it. There are a number of really quite remarkable themes emerging from the banking sector right now. One is obviously the profits, right? So, this used to be a sector in Europe which generated around 190 billion worth of pre-provision profits a year. That looks set to grow to around 290 billion by 2025. That's a pretty decent uptick for a sector that still trades at around the same type of levels, equity-wise, that they did 5 years ago. Another theme, also a big change, is the core versus periphery theme. You could argue that now the periphery is the new core. If you look at the earnings, as you mentioned, in Northern Europe, UK, you have problems with peak net interest margins, and some of the building societies are worried about and are reporting increase in arrears in their mortgage portfolios. Germany, some concerns about commercial real estate exposures. But go down south to Italy, and the biggest banks are reporting return on tangible equities in the mid to high teens, which is remarkable for that space, and with actually no sign of asset quality issues emerging so far. So the periphery is the place which actually is seeing the resilience right now when it comes to European banks. The problems, if there are problems, are emerging further up north.
You talk about peak net interest margins already being seen in some of these regions like the UK. When do you expect to see peak net interest margins in the periphery?
That may be towards the back half of the year. If you take companies like UniCredit, they've been sort of calling for peak net interest income growth, around the middle of the year. They keep pushing that further out, suggesting that they, still feel that they have pretty good momentum. But that should still happen sometime towards the back half of the year. And if you look at the bank lending surveys, the ECB's one, for instance, it's reporting a fairly sharp decline in loan demand, so it does make sense that this sort of tailwind should abate somewhere. But I think where historically, and I think this is back to your point earlier about hard soft landing, historically where you were to see those kind of peaks, you would expect a pretty sharp deceleration and a pretty hard fall. Now, given the bigger resilience in earnings momentum and the work that's been done in shoring up capital and reducing NPLs, the fall is likely to be much more shallow when we get there. And that, I think, is why the market's unlikely to fall as much when that happens.